To business, the outlook for Australia's struggling retail sector has improved this year thanks to the Reserve Bank cutting interest rates, which has given Aussies more cash to spend. Joining me now is business reporter Edward Boyd. Hey there, Ed. Monthly retail sales numbers just out. What do they say?
Look, they're not that bad. Retail spending up 0.2% during the month of May and up 3.5% over the past 12-month period to about $37.3 billion. And this month, the ABS say it was really due to a big fight back in spending in department stores on clothing and on shoes and footwear. So here you can see May retail sales up 0.2%. If we go to the next page, we should have another chart just showing what retail spending has done going back to August last year. And you can sort of see it's been a bit up and down. We had a negative month. But basically, with the Reserve Bank cutting interest rates twice already and another rate cut expected just next Tuesday, it is giving Australians more money in their bank accounts. We have seen the household savings ratio increase recently. And obviously, that's good news for the retail sector. The ABS today said people didn't spend as much money on food during the month of May and going out into restaurants, which has been a sector which has been strong for the past few months. But instead, it was spending on discretionary items, so things you wouldn't normally buy, such as winter clothing in department stores and footwear and things like that. So it was good news for the department store chains during May, as Aussies have a bit more cash to spend and they're actually spending on items that they need to get through the winter period, Chonglei.
And what does this mean for the RBA when it tries to make a rate decision?
Look, this is pretty important data for the Reserve Bank to look at when they hold their board meeting, which kicks off on Monday next week. Obviously, retail spending is very tied to Australia's economic growth. Household consumption is a really important part of GDP growth in Australia. And clearly, when they've cut rates a few times, it has given people a bit more money to spend. But if they obviously don't want inflation to go up. Inflation's now within the RBA's target band, and they are, according to rate cut odds, locked in to cut rates. We should have a chart showing the cash rate chances of a cash rate going down just on Tuesday. This is the probability, according to the markets, is 96%. So it's basically entirely locked in for the RBA to cut rates again by 25 basis points in just a few days' time. So that rate cut is going to give more confidence to the market, to the economy, and to the retail sector as well. So we should get to see the impact of that potential rate cut coming through to Australia's bank accounts from people that pay mortgages or pay business loans in about 2 months from now. So we should see more money starting to flow into the economy on top of the 2 rate cuts we've already had.
And Ed, on movers, what's the deal with Dominos Pizza? Its stock tanking more than 20%.
Yeah, this was a real shock here from Dominos Pizza. This is obviously a retailer that was in the quick service food restaurant or the fast food market, and they've really struggled over the past few years. Dominos Pizza had a big global expansion strategy, opening thousands of stores all over the world, not just in Australia, but in Europe and in Japan. But they basically had a chief executive in the role for a long period of time and spent a long while finding a replacement for him. And last year they appointed Mark van Dijk as the CEO of Domino's in November, just about 7 months ago. Anyway, this morning he has announced his shock resignation from Domino's Pizza, and Jack Cowan, who's the chairman of Domino's, is going to take over as executive chairman. So a huge executive shake-up at Domino's. We've got the share price we can show you. It's now almost down 23%. So the shares are worth $15.52 at the moment. Just a few years ago, Domino's Pizza shares were trading around the $60 mark. So obviously investors are losing a lot of confidence in Domino's and their strategy. So Jack Cowan, the billionaire that also has a big interest in Hungry Jack's fast food chain, he's obviously got a massive job on his hands to right Domino's, get the strategy back on track, because right now investors clearly losing a lot of confidence in the company.
Thanks so much for that. Big sell-off.